Welcome to Mulready Minutes with Oklahoma Insurance Commissioner Glen Mulready. This is a podcast about insurance for insurance folks, risk managers, and business leaders. We'll dive deep, examine what is and isn't working, talk to leaders in the industry, and keep you informed on what's happening in Oklahoma and around the country.
Welcome to another Mulready Minute podcast where we bring issues that affect consumers and the industry in the insurance space. And so today's a little bit different in that I have with me our communications director, Liz Heigle, going to be talking about some things that have been in the news a lot lately here locally and getting a lot of attention. So I want to kind of clarify some things. So Liz is going to be sort of the interviewer. I'll be the interviewee today.
This is
as part
perfect.
of this. So.
All right. Well, I think let's hit headlines that we missed possibly in the last couple of weeks. One of them being in the Oklahoman. They had a full spread in the Oklahoman, this whole page. And when you looked at it as insurance commissioner, tell me what you saw.
Well, I think that it's disheartening, some of that, because, and I think that a number of things that have been out in the media of late is that maybe there's not a lot of fact checking happening.
Right.
And so some misinformation gets put out there. And then the really disappointing thing is the media outlets and others, including politicians and folks who are then just repeating different things without
all the misinformation.
Yeah. So without fact checking. So that's disheartening. And so there are places I think to go for information. There are also subtle differences that would be helpful to be explained to give context to some of these things. So all of that.
And I do get that, consumers, especially, like myself, if I don't really look into what all this means, I don't know. I mean, I see it and I believe it, and I think a lot of consumers do that. And, especially with right now, everyone's up in arms about premiums.
Yeah.
And, people are on fixed incomes. There's a lot going on. So news like this really takes off. But this particular piece, I think, is interesting because the graphics and a lot of what it's saying isn't what's going on. So I think I want to talk through the misinformation that's on this piece, particularly.
So I think the thing that gets repeated often and people take to heart, again, including folks running for office who like to repeat that because it plays well with a crowd, is that Oklahoma has the highest insurance premiums in the country. That is just not true. We absolutely have some of the highest insurance premiums in the country. Right. We will typically always be in the top 5 there. We are a weather state. We get more than our fair share of claims from those weather incidents. And not to oversimplify it, but when it comes to rates in our state or any state, it's a math equation, right? It's the premiums that come in and the claims that go out is what drives rates the most. We also have inflation factors, things like that. But
an overall risk.
Yeah.
I mean,
absolutely. But, folks then will throw out, you'll hear often, well, there are other states that have tornadoes and have risks too. But I would just say this, that storms, severe convective storms for us are what drive claims. Now, you may have a state that has equal to the number of tornadoes we hit, but it all depends on where they hit too, right? If you have 10 tornadoes drop down in a year in the middle of a field and do no damage, that's not going to drive insurance rates. It's the claims that actually drive the insurance rates.
Well, and I think a lot of the outlets are measuring Oklahoma against Arkansas and Kansas. So speak to that. Why can't you really compare? Because it's not apples to apples, right? Yeah.
Well, I think there's a couple of things at play there. Some might be even just local statutes. I mean, within each state, those are going to differ slightly. You have cost of goods, that type of thing that impact things. But again, it comes down to the claims. And let me hit on some of those numbers because I get asked this a lot. Why are our rates so high? Homeowners insurance in the state of Oklahoma has been a losing proposition for a number of years now.
Right.
And when I say that, losing proposition for insurance companies, it is not their moneymaker. I am not saying that insurance companies aren't making money. But in the homeowners market, the math is just not there.
Right.
You look at the 3-year average here in Oklahoma, that average loss ratio, and by loss ratio, not to get in the weeds of insurance, but it means the premiums that have paid in and the claims that have been paid out is 110%, the 3-year average. Now, what that means is for every $100 the insurance company took in, they paid out 110 in claims and expenses. And that's the average for all 50 so companies that write homeowners in Oklahoma. We're not talking about one of the companies. That is the average for all 50 or so companies that are writing homeowners insurance. If you look back 5 years, it's a little better, but it still is a losing proposition at about 107% loss ratio. So they paid out 107 for every $100 they took in. So,
well, and I think it's interesting that none of this is being discussed, the loss ratio.
Yeah.
You know?
So it's like anything. I mean, you might say any product it's too high. Well,
right.
Too high based on what? Is it based on, when it comes to insurance rates, is it too high meaning I can't afford it, or it's more than I want to pay?
Right.
Or is it too high because it's creating an unreasonable profit? And that's not what is happening here in Oklahoma.
Now, the other thing that I found that reporters are stuck on is the file and use or use and file.
Mm-hmm.
And they are getting it wrong, like in this piece.
Yeah.
And again, kind of explain, what does that all mean?
Sure. So, you're right. I mean, in this graphic in the newspaper, it's a very, very basic question that is incorrect.
Right.
Just factually incorrect. We are in Oklahoma a use and file state where there are 3 types of filing systems used across the country: use and file, and then file and use, or prior approval. Now, There are about a dozen states like Oklahoma that are use and file states. We're not an outlier out there. And then you've got another 25 or so that are file and use. Now, those are similar. Use and file means that insurance companies can change their rates, start using them immediately. They have to file them with us within 30 days. We then are reviewing those to make sure that they are adequate and non-discriminatory.
Right.
Under file and use, you have to file those rates to the state previous to using those. Now, typically it's a 30-day or 60-day period. You can't start using those until that time frame has gone by. But both of those formats are typically letting the market drive pricing.
Right.
And so I'm a big believer, always have been, in a competitive free market, that if you have enough competition, no matter what that product is, not just insurance, you have enough competition, it's the market that will establish pricing levels as they compete for business. A competitive free market, increases efficiency. It controls those costs. It encourages innovation. That's what a competitive market does.
But it also gives me the opportunity to go and shop.
Yeah. And earlier I'd mentioned 50 companies that are writing homeowners insurance here in Oklahoma. We have about 100 that are licensed.
Right.
We only have about 50 that actually have active policies. But it is a competitive market, and let's talk about that a minute, because that gets thrown out a lot too. That we don't have a competitive market. I'll just say this: no individual, no politician, no one running for office has the ability to state that we do or don't have a competitive market with insurance. There are tools, economic tools, that are generally accepted by the Department of Justice, the DOJ, by the FTC, that measure markets and their competitive level. Again, not just insurance, but other products. And so when you do that math, when you do those formulas, if you will, the Herfindahl-Hirschman Index is one, C4 is another. We did a press release, Liz, back in January, I think it was.
Kind of explaining the whole
Right, and going through those numbers, establishing that we do have a competitive market here in Oklahoma. So I think that's critical, and I think that's critical whether you're talking about insurance or you're talking about peanut butter. It's a competitive market that is keeps that healthy and controls those costs at the levels that they should be at.
Well, and I'm sure it's frustrating for you. You've been in this industry for well over 40 years. So you've seen everything. You know how this works. So I'm sure it's difficult to read some of this. And, you have reporters who don't really know what they're talking about, but they're repeating what they're finding. And so, we want to get the message out. What's what? Yeah.
Super frustrating.
Yeah.
And to your point, and to this point, super frustrating when things are written, things are put out there without ever contacting us.
Correct.
To try to fact check or confirm something. And even if they disagree with us, go ahead and print it, but at least ask some questions.
Right.
We could certainly direct you to some sources. Publicly available information is out there through the National Association of Insurance Commissioners, or the NEIC, that really takes in data from all of the states around the country, from all the insurance departments, available publicly online.
Okay, that's where they can get this information.
Yeah.
Okay.
There's a lot of information on there. I mean, I know with the legislature, there's been some things out there where, who has market share, that type thing,
Right.
and who the companies are here in Oklahoma. That too, all of that information is available at the NIC website. Again, publicly available online.
Here's something I think also people don't know: how difficult it is to compile data from, say, 2025. Because, I mean, tell me the process. If we have a reporter calling and going, okay, they're asking a particular question, we would have to do a data call to get, let's say tornadoes, how many claims were paid out over, if we had a tornado hit in 2025 or 2024. It's not just information out there. Is that correct?
Yeah, so I think there's a couple, like the detail that you're talking about that may be tied to a specific storm or that sort of thing. Those are, we don't generally collect that. We have now started collecting data. We did a data call, and when I say we, I mean nationally.
Right.
We did a data call for homeowners insurance business. Super helpful. We are now rolling forward. I am the vice chair of the Property and Casualty Committee nationally this year for us, and that is another top priority working on. Is we will have an ongoing data call happening. But even with that, it's annual, and so by the time you capture that, it's a little bit dated. Right. But I think that as we do that on a regular basis, on an annual basis, that will be real helpful, because that allows us then to look at the detail of that to see within our state, are there pockets where policies are being non-renewed,
right,
a much higher rate than others, or what is happening with rates and premiums and heck, even deductible levels there with homeowners insurance.
And I'm curious about, once we start getting more data nationally, how it's going to compare to the data that we see on Insurify website, Money Geek, Lending Tree. They seem to have where the reporters are, using that information and saying this is, because they'll say the premiums are $6,000 a year in Oklahoma, where we are showing something different.
Yeah.
So I'm going to be curious to see how close the data comes together and where do they get their information?
Yeah,
because they're not, they can't do a data call.
No, and in fact, the Lending Tree is a good example where there's some national organizations that were trying to figure out when numbers came out. They put those NerdWallet's another one, and Lending Tree, like,
where did they come from?
Where's this data coming from?
Right.
And there was an article in the Journal Record, can't remember when that was, but in the last few months, that really took a look at that and did reach out to us and ask some questions. And I think he initially asked, well, I'm seeing these numbers, but it doesn't match up with
what you're saying,
what we're looking at kind of nationally, this information where you directed us to. And then there was some information from out of Atlanta. I know there was a survey done or something there, more having to do with mortgages and that type of thing. But I think he pointed out quickly that these numbers just aren't matching up. Where are they getting these numbers from? So anyways, it's super frustrating.
It is. Okay. Moving forward, let's talk about, what do you want people to know when they're looking at these headlines? And obviously, now we've got oil prices going up. People are, struggling at the gas pumps. You've got that. Just groceries are going up. So everything's going up, but premiums seem to be such a big piece of, the dollar that comes in to most homes. And so, all we can tell them is shop around, can't.
Yeah, I think there are some other things you can do, but I think it's very frustrating for folks. Nobody wants to pay more for anything.
No.
Right? Like whether you were talking insurance or groceries. I don't know. No one likes to pay more for anything. I think it's helpful to try to understand what is driving that and what is not driving that. And let me talk about, because we didn't bring that up, but another thing that gets thrown out a lot is that we are paying for the wildfires in California, or we're paying for the hurricanes in Florida. And that's not the case. When I rattled off 110% loss ratio, last 3-year average, That's Oklahoma numbers only. And again, that information is publicly available online to look at that math, those numbers. And that is what drives rates. Where there's not this cross subsidization that is happening that kind of gets accused of a lot. And so I think too, I think we want to allow the market to work. I believe in that. I think that the quicker that companies can respond, good or bad, is helpful. And by good or bad, I mean with increases or decreases, because we're seeing decreases. I heard a legislator just a couple weeks ago at the Capitol. I attended a meeting and heard her tell the committee that the Oklahoma Insurance Department has never received a rate decrease filing, which is absolutely not true. I mean, we had, I don't know, we probably had at least a half a dozen last year rate decrease filings. I think from a homeowner's insurance rate standpoint, we may be a bit of at a tipping point. I think maybe we were ahead of the game. Last year, we were 38th in the country as far as the highest average rate increase. I mean, there were, 37 states that had higher average rate increases that year than we did. I think we were a little bit ahead of the game in kind of catching up with those rates. That's my hope and prayer, too, at least.
We'll see that.
So I think this year, too, that we will start to see some of those filings. So I think the quicker that companies can respond, I think if you delay that too much, you try to interfere in that market too much. We watched it play out in California, right, over the last couple of years, where they had very restrictive controls on homeowners rates and what could be done. And unfortunately, you then had every major insurance company stop writing new homeowners insurance in the state of California.
Oh, yeah.
So you had folks going uninsured or going to their state plan. And now the state plan is billions of dollars in the hole because then those wildfires hit.
And we don't have a state plan.
We don't, and glad you brought that up. We do not have a state plan. We have a market assistance program that allows folks to find insurance, and it has worked very well for, I don't know, at least probably 15 years here. We also don't have a wind pool or we don't have a state insurance company. So
when you say wind pool, kind of explain that, because I'm sure the listener who's not Good insurance
point.
Savvy.
I'm glad you nailed me down on that.
Yeah.
Because it does impact things. Texas is a good example. All along the coast of Texas, I don't know how many counties, there are 20 counties, I don't know, but we're basically, your homeowner's insurance premium does not cover wind. Now think about in Oklahoma, if we were able to take, I don't know, half of our counties and the insurance companies didn't have to cover wind, how much that premium would be reduced.
Well, and we had some terrible winds on Thursday and Friday, I think. Wednesday, Thursday, Friday.
Yeah, crazy.
Yeah.
So you have a number of states, you have Louisiana, you have Texas, many states that might have a wind pool. So what happens then is the state establishes a pool of money that covers the wind risk on those.
Oh.
And they do that because of an availability issue.
Okay.
I've been asked, maybe beat up a little bit about why aren't you pushing for a state plan? Why aren't you pushing for a wind pool? My response to that is we don't have an availability issue. We have insurance companies that will write homeowners insurance everywhere in our state.
Right.
What Texas, Louisiana, states like that have had is they have areas where insurance companies would not write coverage.
So they had to
respond with some way. Florida, their largest homeowners insurance company is Citizens Property Insurance Company. That is owned by the state of Florida.
Okay.
It's the largest insurance company because they had to, because not enough insurance companies.
They were leaving Florida.
Yeah. And so you bought a home on the coast, anywhere near the coast of Florida, you could not get homeowners insurance. So this was how they come up with a solution.
Okay.
We don't have an availability issue in Oklahoma. Now, I've said publicly many times, we certainly can argue that we have an affordability issue, but every dollar does go to a private insurance company. So that's where that average rate comes in. Well, you're pulling out the risk of a Texas, a Louisiana, a Florida, where you're pulling the bad risks, if you will, out of there. Think of what that does to the average premium.
Okay. Now,
So that's my point of context.
Right.
That in fairness of comparisons, you're really not comparing apples to apples there too with average premium.
Okay. So talking along the lines of the legislature, saying things that you're just like, wait, where'd you get that? As right now we're running some legislation. How's that going?
Good. So there's been a lot happening I just spoke to a couple colleagues in the last couple of days in other states too. And I should point that out too. This whole conversation about homeowners insurance and rates and solutions is not just out in Oklahoma. It is happening around the country, literally in every state. Now,
and it seems like it's a bigger topic at the NAIC national meetings, right? So everyone's.
You and I just came from a meeting a few weeks ago, and that was the topic
Major
of conversation.
Topic.
Now, the other day I spoke to my colleague in Idaho. I mean, their issues are wildfires out west, right? And you have hurricanes on the East Coast, and in Louisiana, Texas. Ours is severe convective storms. That's what drives our damage, our storms, and our claims is high winds and hail, typically, right? And tornadoes. Right. But
I feel like wildfires have really jumped up.
Yeah, well,
this last year.
Almost exactly a year ago, we had the wildfires in Stillwater and Manford and those areas. And even, the other day with those high winds you were talking about, it was almost to the day. We had those high winds, which then ignited that. So it is. So along those lines, though, what I would say is there are things folks can do other than shop around.
Right.
So like when it comes to wildfire, you need to take a look at your home and see what is within, 6 feet of my home that's combustible. Other piles of wood, and we like to have our shrubbery, things that are combustible and that kind of thing, right around our house. But in a perfect world, sort of wildfire mitigation, you want at least a 6-foot barrier between your house and anything combustible. And then there are also screens and filters that you can put in your soffits and that type of thing, because most of in the wildfires that happen like in Stillwater, that's what's happening is embers in the air getting in through the vents and into the home and then igniting a fire. So there are screens and things that you can put in place to take care of that. So those are some things you can do. You can trim branches, to talking about just mitigation of homes. Take a look at your home, and are there big branches hanging over my house?
And we replaced our mulch with, gravel rock against the house.
Non-combustible. Yeah. But, talking about trimming trees, that's going to cost you money. That's a maintenance type issue. However, if you think about it, you're probably a lot better off spending $1,000 to trim some branches away than to have that branch come down in a storm and then you have a damaged roof.
Right.
And it's going to be your deductible. I don't know, if you have a $250,000 home now, you may have a 2% deductible. That's $5,000.
Right.
That you're going to have to pay as part of your deductible.
Out of pocket.
Might be better off to pay $1,000 or $2,000 to mitigate that. So
now I'm just going to switch gears just for a second. I wanted to check in on our Strengthen Oklahoma Homes grant program. So we're basically in our second year. How are things going with that? And are we seeing homeowners, I guess, their premiums going down because they got involved with Strengthen Oklahoma Homes? Yeah,
we are. We're just barely into our second year. So we launched March 4th of last year. And so it's going well. We have got about 300 homes that have been, we've issued grants on, $10,000 grants out to folks when they are replacing their roof to make that a fortified roof. So that word is getting out. There's a process involved. There, you need to have a certified evaluator. You need to have a certified roofer, certified by IBHS, and with us, and oriented with us, or attending an orientation session with us. So it's going well. We've been trying to kind of piecemeal that through. We had set for this first quarter 300 applications,
and it's statewide.
Correct. It's now statewide. And for the first time in this program, we maxed out of that 300 for this quarter. So that was just as of last week.
Wow.
So we're getting momentum and interest and word out there. Now, the good news is folks are immediately seeing an average of a $750 to $800 discount. So their annual premium, on an annual basis, they're saving $750, $800 on their premium.
Okay, that's pretty amazing.
And they're also lessening the chance of that deductible again or a future claim. So given the market that we have, the more you can do to not have a claim, the better. And so we copied Alabama's program. It's been very successful. In fact, I'm vice chair of another national committee, which is our pre-mitigation We just had a call yesterday on that, and this is what we're working on as some of these programs. We'll probably be rolling out, working on a model act for other states to pass similar. There's probably 30 states that are looking at the very program that we have launched.
Okay.
And then some of them are doing, again, back to where you are in the country, the IBHS wildfire program. But the idea is let's go back to the very beginning of this conversation, that math equation. We have to impact that math equation to impact the rates. So if we can lessen that claims number, premiums in, claims paid out,
we will see.
We can start to impact those rates, right? And so that's the idea of this mitigation program, our roof program, and the wildfire program that's out west. We may take a look at that down the road too, even implementing a wildfire program here. Who knows? But that will be up to the legislature.
Okay. Well, this all sounds like we're moving forward.
There's a lot happening.
There's a lot.
And there is at the legislature too, just up the street. We have a number of pieces of legislation. Something that we'd like to see happen too is some tort reform. A lot of folks, I don't know. I think maybe they think that there is a separate pool of money that insurance companies use to handle litigation when they get sued, but there isn't, right? That comes out of your premiums. That is the source of dollars for companies. So we think the more that we can steer folks towards mediation, so we're trying to beef up our mediation program this year and keep that out of the courts. That's just better for everybody. Keeping those litigation costs down. We won't see it in our
premiums later.
That's ideal, right?
Okay.
Right. So we're doing that. A number of other consumer protections where we're trying to speed up insurance companies' response to consumers. So we've got a number of things in the works this year.
All sounds good.
Yeah.
All sounds really good. Okay. Just mention to listeners our resources, our website, all of that, because I do think that, in order for people to understand what they're reading, they've got to utilize our resources to educate themselves on their everything insurance.
So our website, oid.ok.gov, wealth of information there on homeowners insurance, as well as some of the mitigation or steps that you can take. Again, shopping around is your best tool when we have a competitive market out there. But then you've heard here today too some other mitigation efforts that you might be able to do. NEIC, the National Association of Insurance Commissioners, I've mentioned them a couple times during this talk about just the resource and the information that's publicly available, whether you're talking about the premiums that are brought in by each insurance company, the claims that are paid out within the state of Oklahoma. It's broken down by each state. It also is broken down by insurance company and by group.
And it is easy to find on their website.
It is.
I did.
But I would point out that subtlety. So if you're because you might have ABC Insurance Company or ABC Insurance Group, where they have like 4 different companies that are writing insurance in Oklahoma. Now, we license insurance companies.
Right.
Someone has a policy, they're looking at that company, but they may fall into that same group. So if you're talking about market share and that type thing, it really is more important the group type thing, because State Farm, Farmers, some of you might know that they might have a few different companies they're writing, so that market share comes under their umbrella. So we have that. IBHS, Insurance Institute for Business and Home Safety, they're a nonprofit out of South Carolina, and they're the ones who have the fortified roof program that we and a handful of other states are utilizing. Another great place to go and look and read up on.
They've got a lot of great information.
Yeah.
Okay. All right.
It's a lot.
That is a lot. Wait. And we didn't even hit on some other things, so we'll have to come back. Okay. Well, thank you.
Wrap it up?
That was great. Yeah, let's wrap it up.
Okay. Well, hey, great conversation, a lot of information. I feel like I talked fast and talked a lot, but hopefully that's helpful for folks out there to find out and hear what is happening here in Oklahoma, try to sift through some of the misinformation that's out there. So if you need that information, there's those websites, and we'll look forward to seeing you next time.
If you found this episode informative, please subscribe and share with your colleagues. Visit oid.ok.gov/podcast. Let us know what topics you would like to hear about. Until next time, take care from the Oklahoma Insurance Department.